Hello everyone. Now, on this video, I'm going to be taking you through the step-by-step process how I caught this trade on Euro USD. So I caught a buy trade today on the Euro versus US dollar. So now my name is Fortune Uperebu and this is Fortrade Official, where you learn everything about trading from beginner to advanced. In this video, I will guide you through the step-by-step process on how I caught this Euro USD trade. Now, please don't forget to like, comment, subscribe, and turn on your notifications to get more of this amazing content. So let's dive straight into the video. So, firstly, heading to the daily time frame. Let me just take all this off so that we can see. Now, going to the daily time frame. Remember that our draw, we have been targeting these highs here, this buy side liquidity. Yes, because we understand that price has already dipped because the algorithm that makes price to move, that makes price to do what it does, it seeks two things. It either seeks liquidities or it seeks inefficiencies in price. So here we have price already dipped into this inefficiency, which you can call, which is known as fair value gaps, FVGs, and it's now pushed upward. Then it now retraced back. Yeah, so we can see them. They are pushing it down one more time to engineer more liquidity to push it back to the upside. So, and it now dips into this daily order block, and then we continue to see higher prices. So our overall draw is still this BSL. So we were looking for buys. You get, we were looking for buys. So coming down to a lower time frame. So us already knowing where our draw is, us already knowing where our draw is, and we are looking for buy. We are expecting higher prices in price. So then we came in and then first of all we marked out our section open. That's the 2 a.m. New York time. Two a.m. New York time. Yes. So price opened at this point, and but before that, we were looking at this zone, here, this this liquidity here, this high. Let's mark that out. We were looking at this high here, and then let me label that so that we can have a clearer view of that. And that's our buy side liquidity. So that's our buy side liquidity. So we had our buy side liquidity marked out, and then price opened at this point. Price opened at this point. Yeah, price opened at this point. So we noticed something, that the last bearish candle just before the section opens, when the section opened, price push higher, then drop down back and use that last bearish candle as an order block and push price higher, taking out this initial buy side liquidity here. So yes, so the moment that happened, then we now notice something, that price use this first bearish candle before the section open as an order block and push price upward, taking out this initial buy side liquidity. Taking out this initial buy side liquidity. Then and we have somewhat like a turtle soup here. So notice that the candles closed below. It was only the bodies, the wicks of the candle that did the damage. Yes, here's what I'm talking about. This point here, this point here. Notice that the candles did the damage. The wicks of the candles did the damage, but the bodies of the candle, each of them closed below that liquidity. So we have somewhat like a turtle soup here. Then we now notice that then price began to sell after taking out this buy side liquidity. And then we now notice that from this point here, all the candles were not breaking, like they were not breaking below. But they were acting as support and going higher. So that began to give us a strong confirmation that okay, what we are seeing here, that price is not ready to go below today. It's trying to like move higher. You get what I'm trying to say. Yeah, because every time it came back down to this our initial point where we opened, you get it kept on. And notice something here. The first presented fair value gap. Notice something here that when we open, notice that price created the fair value gap exactly at, yeah, so the first fair value gap as the section open, notice that everything price did, it did within that range. You get, it did within that range of this fair value gap. So this fair value gap that opened, when price opened, price created a fair value gap. And notice that each of the time that price came back down to that our initial fair value gap that price gave us when the market the section London section started, notice each of the bodies of the candle relaxing or elapsing on that fair value gap. That fair value gap kept on acting like a ceiling to keep pushing the price. It kept on acting like a ceiling to keep pushing the price upward. Yeah, so these are some of the confluences that give us, okay, should I say, the confidence to know that okay, our bias is actually true. So from this place now, so having our fair value gap, and then so from this point now, when price took out this buy side liquidity, and so we began to see lower price began to come down, then we noticed that price created the fair value gap here again. Price created the fair value gap right here. Yeah, yeah. So at right here. So when price was at this point, we were watching this. We were watching this. We were watching this. We were watching this. So, and knowing that we are expecting up movement, so when price came to this point, we marked out our order from this place at this candle here. Yeah. So the moment price was within, like price was inside of this fair value gap. As price was inside this fair value gap, then we took our entry from here. We took our entry from here. Then you have to ensure that you give price enough breathing space. Our stop loss was around somewhere here. Was around somewhere here. Yeah, so around somewhere here. So we took our entry. Then yeah, just just like that. Yeah, just like that. So targeting this buy side liquidity here. Yeah. So and price delivered that nicely. But notice how we had to hold through all this. And that's one thing about trading. Not every day it gets to go smoothly the way you want. Sometimes it could take out your stop loss before going to the direction. Sometimes it could spend a lot of time like consolidating in that area. But you just need to build the resilience, the discipline, the ability to control your emotions. You get just imagine seeing how price danced at this point and we close the trade and then it ends up going to our direction, then we begin to regret. So trading is not always smooth. Sometimes it's just sometimes you don't want to go just smooth like that. So it will do a lot of damage before going. Then notice when we were able to hold through all these toggles, then notice them from here now began to go smooth. So we need to build that resilience. And notice that this was and notice this was just during the New York section. That's during the New York section. You get during the New York section. Okay, so yeah, so that's it. Using our fair value gap, first of all, our draw on liquidity from the higher time frame, because the higher time frame are parent to the lower time frame. So having our bias, we come down to a lower time frame, marking out our section, marking out our section. That's the New York section. Yeah. Then marking out our section. Yes. So our fair value gaps, then taking our entry, our targets, then buy side liquidity. Yeah. London section. London section. Yeah. So but not every time it happens like this. Sometimes when the section opens, price might want to dip down and take out this liquidity before going forward. But the reason is because notice this our previous day fair value gap. Let me mark that out so that we can see it. So notice that all this price action happened still inside of our previous day fair value gap. So there was no need for price again to try to go down below seeking buys, and we have somewhat of a relative equal lows here. So we have relative equal lows here. relative equal lows. And price moves from internal range liquidity to external range liquidity, or external range liquidity to internal range liquidity. So all this price action happened inside of this our previous day fair value gap, and then we have a draw, this internal range, this relative equal lows here, this relative equal this relative equal highs here. Yeah. So the algorithm was seeking to take out these relative equal highs. So marking out our fair value gap, we took our entry, then being able to hold through all these hurdles. So our overall target, this buy side liquidity here. So this was how we caught this trade on Euro USD. Now the truth is that in trading, simplicity matters. Get if you come and you try to overcomplicate things, then you can you will cause a lot of trouble for yourself. So just try to simplify, just try to make it more systematic, more mechanical, like your strategy. You get, so you don't overcomplicate things. You get, just try to make it simple. You get, just know what you are looking for and wait for that your setup. You get, and notice here this fair value gap. When price dropped, you can see price just hanging around that place. See price just hanging around that place. So yes, that's it about that. And this was how we got the trade on Euro USD. So thank you very much for staying through to this video, and I hope to be able to bring more of this valuable content to all of you. Thank you. Please do not forget to subscribe. Thank you.